Good day, everyone. My name is Kevin Gallagher, Director of the Global Development Policy Center, or the GDP Center here at Boston University. And we're proud and honored to co-sponsor today's event with the Inter-American Dialogue in Washington, D.C. Today, we'll be releasing two databases, China's Global Energy Database and the China Latin America Finance Database, which is a joint effort between the Global Development Policy Center and the Inter-American Dialogue. Indeed, I think it was 9 years ago this month that we forged a partnership with the Inter-American Dialogue to increase the transparency about Chinese development finance in Latin America and the Caribbean that'll allow policymakers, civil society, journalists, scholars, and beyond to obtain a more empirical-based understanding of China's economic activity in Latin America. Back then, with colleagues Amos Irwin and Catherine Koleski, I published a report for the dialogue titled "The New Banks in Town: Chinese Finance in Latin America." We modeled our methodology from work of Deborah Brodegum and her team that would soon become the SICE-CARRY initiative at Johns Hopkins University. And Margaret Myers, who was here with us today, came up with the idea of putting together a web-based interactive of this data. Well, time flies. Next year, it'll be a decade that we've been doing this together. I should say that the Inter-American Dialogue was founded in 1982, and it engages in a vast network of global leaders to foster democratic governance, prosperity, and social equity in Latin America and the Caribbean. The dialogue works to shape policy debate, devise solutions, and enhance cooperation within the Western Hemisphere. A link to the dialogue's webpage is in the chat right here. Similarly, the GDP Center adapted these methodologies to estimate the reach of China's global energy finance. The GDP Center has a number of research clusters, and we've long had a lot of work on energy and climate change issues. In 2017, we published an academic journal article in the journal Energy Policy that looked at China's global reach in terms of its development finance in the global energy sector. And also established an interactive webpage in 2017 on our webpage called China's Global Energy Finance. And we're now in the fourth year of updating that here. We released these two databases along with accompanying policy briefs and interactive portals on our webpage during a year when development finance is needed more now than any other year when we began tracking these things. Emerging market and developing countries contracted over 5% in 2020. With upwards of 150 million being pushed back into extreme poverty. The economies in Latin America were the worst hit, contracting by 7.7% in 2020, the largest contraction on Earth in the COVID-19 era, and the largest in the region in 120 years. In per capita terms, the COVID-19 economic crisis in Latin America put the region back to its 2010 levels, effectively causing another lost decade in Latin American economic growth. The region also has experienced 500,000 deaths to COVID-19 even before the United States did, and is the most in the world. And it's projected to have the slowest economic growth in 2021. The private sector, by its nature, is reluctant to invest in the kind of economic activity that'll help emerging market and developing countries in general, and Latin America in particular, build back better in a time of crisis. In times like these, this is when development finance needs to rise to the occasion, providing countercyclical financing that can get economies going again. As our previous research has shown, China's development finance tends to be concentrated in the infrastructure sector. This is highly welcome given that infrastructure tends to have the highest, what we economists call multiplier effects, where $1 multiplies into more than $1 of economic activity across the rest of an economy. Given the lack of major new incomes and capital and the lack of attention to infrastructure until recently in most of the Western-backed development finance institutions, Chinese development finance has been very welcome in the world. New research forthcoming in the American Economic Journal from Axel Dreher and some of his colleagues has shown that Chinese development finance has been associated with economic growth, whereas there hasn't been a robust relationship between World Bank finance and economic growth during the same period under study. But the key to a successful COVID-19 recovery is not simply growth, but the kind and composition of growth to help us build back better. As the world tries to bounce back from the crisis, there's a global consensus that we need to build back better economies that are more socially inclusive, more resilient to external shocks such as capital flows, climate change, and of course, pandemics, and that trigger a structural shift towards zero carbon economies. If the past years are a guide, the composition of development finance Chinese development finance has not always been aligned with these global goals. Our China's Global Energy Finance database has shown in the past that much of Chinese overseas development finance has been heavily exposed in the coal sector, the oil sector, and gas sectors that are rapidly becoming stranded assets in a changing global economy and lock countries into unsustainable extractive growth paths. Where there's little investment in coal in the Latin American case, there's a lot of investment in oil concessions and hydroelectric power, especially in the Amazon region, which our previous research has shown triggers deforestation, sometimes social conflict, and global carbon emissions. Nonetheless, Chinese development finance has also been heavy in the clean energy sector, building wind farms in Ethiopia, solar power plants in Pakistan, and Latin America's largest solar power plant in Argentina, showing that China has the tools and comparative advantage in those sectors if they want to make such a shift. My colleagues will share with you the latest estimates on the extent to which Chinese development finance is poised to help the global energy economy and Latin America and Caribbean build back better from the COVID-19 crisis. First, you'll hear from my colleague here, Xinwei Ma. She'll share our findings from the China's Global Energy Finance database, and she will be followed by Margaret Myers of the Inter-American Dialogue, who will discuss this year's China's Latin America Finance database estimates. Margaret Myers is the director of the Asia and Latin America program at the Inter-American Dialogue. She established the Dialogue's China and Latin America Working Group back in 2011 to examine China's growing presence in Latin America and the Caribbean. She's also developed the China Latin America Finance database with us, which is the only publicly available source of empirical data on Chinese state lending in Latin America. In addition to maintaining the Dialogue China Latin America program, she's published a number of articles and edited and published books. And in 2018, she was identified by Global Americans as part of the new generation of public intellectuals. After Margaret's presentation, we'll hear from our own Rebecca Ray. She will discuss some of the findings of our accompanying China Latin America Economic Bulletin. So after each one of these folks gives their presentation, we'd like to have a global dialogue with each of you. If you look at your Zoom page right here in the bottom right-hand corner, you'll see a Q&A button. So throughout the presentations and obviously afterwards, please first put your name and affiliation so we can get to know each other. I will take clusters of these questions and ask them to the panelists after they're done. So thanks everyone for coming, and we'll start off with Xinwei Ma.
Okay, thank you so much, Kevin, for the introduction. And thank you everyone for tuning in to this session of us introducing some of our works looking at China's overseas development finance in the energy sector and in Latin America and the general economic cooperations between China and Latin America. So without further ado, I'm going to start with China's global energy development finance in 2020. What I'm going to do is walk you through a snapshot of China's overseas development finance in the energy sector in 2020 and put them in the context of the global development finance landscape under COVID-19, the global debt sustainability situation in 2020, and China's overseas development finance in energy throughout the recent years, and the climate action commitments in 2020. So first of all, some of the numbers from 2020. We saw that China's two development banks with global operations, namely China Development Bank and the China Exim Bank, has invested $4.6 billion in the energy sector overseas in 2020. So this is a continued decrease from since 2017 from the 8.1 billion recorded in 2019. And this adds up China's overseas energy sector development finance to 248 billion. So this decrease is almost within expectation, given that in 2020, the COVID-19 situation has disrupted business travels, economic activities, and the global energy demand is not expected to return to its to its pre-crisis levels until 2023. So the energy downturn in many countries is driving many countries towards their debt ceilings. But on the other hand, as I said, putting it in the context of global development finance as the drivers and counter-cyclical tools for energy, for investment and economic development, how is the Chinese bank doing comparative to the international development finance? So this is putting the CDB and Exim loans in the energy sector side by side to the World Bank lending in the energy sector. So as we can see that in 2020, even though there has been a significant decrease from the Chinese banks, it is still almost the same amount as the energy sector lending from the World Bank. And then in the broader context, in 2020, we saw that the World Bank, the Inter-American Development Bank, Germany's KfW, Japan's International Cooperation Agency has increased their lending overall. But all the other international development finance institutions that have reported their full year project databases have all seen decrease in their total lending. And except the World Bank and International and Inter-American Development Bank, the energy sector lending has all decreased for the development finance institutions that have published their project databases. So then coming back to CDB and China Exims overseas energy projects, we recorded 8 of them distributed in 8 countries across Africa, South Asia, Europe, and Southeast Asia. And Africa received the most, as you can see, led by a bigger loan for a gas pipeline in Nigeria, and 2 hydropower stations in Cote d'Ivoire and Rwanda, 1 solar project in Lesotho, and in South Asia, there's 1 power grid network strengthening project in Bangladesh, 1 coal plant in Pakistan, and in Europe, there is 1 project in Serbia on district heating, and 1 rural power grid extension project in Southeast Asia. And then putting it in the context of the global debt sustainability in 2020. So as we know, China Development Bank and China Exim Bank have been important participants of the debt service suspension initiative under the G20 in 2020. And so as listed here, 5 of the 8 projects that are recorded were given before the DSSI agreement took effect. And except the 1 loan to Serbia, all of the other 7 loans went to lower middle income countries. And all of those given after the DSSI agreement took effect went to countries that were not participating in the DSSI. So we can see that generally they are avoiding debt conflicts under such situations. And then in terms of the sectors, besides the gas pipeline loans and the district heating project, we can see that what is prominent is there is an increase in the transmission and distribution sector. And in the power generation sector, it is still mostly dominated by coal and hydro, except for 1 solar project that we saw in Lesotho. And then putting it in a longer time range, as we have seen in the first graph, Chinese overseas lendings in development lendings in the energy sector has been on a sharp increase since 2013 at the announcement of the Belt and Road Initiative until 2016. And then since 2017, there has been a sharp decrease in the annual lendings. So we clustered these two periods and looked at if there has been any changes sectorally in terms of energy sources and in terms of geographic distribution. So in this table, as we can see that following what has been the trend in 2020, there has been an increase in the transmission and distribution sector, even though the total lending has decreased greatly. And then in the power generation sector, the decrease has mostly been because there was a large nuclear power plant lending to the Hinkley Point C project in the UK in the first sector. And otherwise, actually the lending in the power generation sector has remained almost the same. And then in the exploration and extraction sector, we can see that basically the drop has been driven by the decline in this sector. And then in terms of the energy sources, since most of the investments in the energy extraction and exploitation sector is in oil and gas, we can see that the major drop has been in these kinds of energy sources. And then there has been a slight decrease in coal, and then a slight increase in renewable energy. And then in terms of geographic distribution, as we will mention as we turn to the Latin America region, there has been a decrease in investment in Latin America, Europe, Central Asia, and then the lendings in African countries has remained high, and the percentage of loans in South Asia and Southeast Asia has remained stable. And then in terms of the climate actions commitments in 2020, as we can see, China made significant commitments committing to carbon neutral by 2060. And there has been many climate-related guidelines and official documents coming out in 2020. The Green Belt and Road has been emphasized in multiple situations. And the CDB, the state grid, major Chinese companies have signed MOUs with the Ministry of Environment and Ecology. So there is significant momentum domestically on climate actions in 2020. And then in terms of the major recipient countries of Chinese development finance, we see countries such as Bangladesh, Philippines, Pakistan committing to coal constraints in terms of investments. And in terms of other financiers, we see that countries such as the UK, Japan, and many other commercial financiers are committing to coal exit policies. And then in terms of the global investment, there has been a 6% decrease in total energy sector investment, but in renewable energy sector, the investment in energy transition has increased by 2% in 2020, and China still leads the renewable energy sector investment in the world. So are we going to see a pivotal transition to more sustainable investments from the Chinese development banks in the future? That remains to be seen, but there is significant momentum and synergies that the Chinese development banks can seek. So these are the key findings from the China Global Energy Finance. And I'm going to turn it to Margaret to zoom in more to the Latin America region.
Terrific. Thank you so much, Xingyue. Well, first of all, let me say it's great to be here, and always a pleasure to be collaborating with the Global Development Policy Center at BU. As Kevin mentioned, this is a long-standing and indeed very fruitful collaboration. I'll use the next few minutes, as Kevin indicated earlier, to share some key findings from our China Latin America Finance database, and the link to that is in the chat. So you can take a look at that along with as you listen to the presentation if you'd like. This is a product of collaboration between both the Inter-American Dialogue and the Boston University Global Development Policy Center. And we've been tracking, Chinese policy bank loans in this database, that is, again, China Development Bank and China Export-Import Bank, to Latin American governments and state enterprises, so state-to-state loans, since lending to the region from these policy banks began in 2005. I'd first of all say, as Xingyue noted in her presentation, that we've seen a clear decline in energy-related lending from China's policy banks in Latin America and the Caribbean, including the provision of loans that are semi-collateralized by oil, which we classify in the database as energy loans. But we've also seen a decline in sovereign lending for all sorts of other projects. To the extent that this year, and this is of course the big news for this year, right? For the first time since 2006, China Development Bank and Exim Bank issued no new loans at all to Latin American and Caribbean governments or state-owned enterprises. Let me see if I can make this go. There we are. This is really a first in recent China-Latin America relations, but as you can see in this chart, the absence of Chinese state finance this year is also reflective of a broader downward trend in Chinese sovereign lending to the region since 2015. And although there is not really a lot for me to report in terms of actual numbers this year, the big zero in 2020 raises plenty of questions about why we aren't seeing the sort of activity that we've seen in the past. And I think, unsurprisingly, there are multiple reasons for this recent downturn in Chinese state finance. Some of this is no doubt COVID related. In the middle of the pandemic, Latin American countries weren't necessarily seeking out finance for large-scale infrastructure projects in the region. Infrastructure plans, national infrastructure plans, were largely on hold in most cases. But neither were China Development Bank and Exim Bank necessarily focused on sovereign lending this year. We found through our own research that much of CDB's attention, in particular, Exim Bank to a degree as well, was focused on addressing the challenges associated with pandemic era project management, including by issuing low-cost finance and working capital loans to Chinese companies operating overseas that were facing project delays or problems with supply chains. So essentially keeping the Belt and Road Initiative going despite, these many global challenges. Another possible reason for the decline in state finance is that, Chinese policy banks, especially CDB, have grappled with a sometimes problematic portfolio in Latin America and the Caribbean, including the prospect of losses in Venezuela, and delays in other scheduled projects. And many of these problems, debt-related considerations in particular, have only worsened of late. And with these difficulties in mind, China has refrained from extending any new credit to Venezuela, as you can see. Let me see. There we are. As you can see here. Even though the country was once a primary destination for China's policy banks. Venezuela accounted for 45% of total policy bank finance, so nearly half since 2005, but has received no new loans from CDB or Exim Bank for the past 4 years. And this apparent reluctance to lend more to Maduro at this phase, has really accounted for much of the drop in overall lending in recent years. Lending has also, of course, slowed to the other main recipients of Chinese policy bank finance and LAC, whether we're talking about Brazil's Petrobras or the government of Ecuador. Here you can see that the top, recipients are indeed Venezuela, Ecuador, Brazil, Argentina over time. And here we break things down by policy bank. You can see that China Development Bank is a far more active lender, or at least has been, in the not too recent past in Latin America and Caribbean than is China Export-Import Bank, although they do tend to lend for different reasons and in support of different sorts of projects. I should note, though, that that Ecuador, although it didn't receive any finance this year, was in talks earlier about the possibility of new loans. And I'll address that in the details of that particular agreement in just a moment. I think another hypothesis, and I throw this out there for my colleagues, for my fellow panelists, and also for all of you listening in, is that this model of tied loans, right, of Chinese finance to sovereign finance to Latin American governments and state-owned enterprises has potentially run its course, right, in Latin America. Part of the rationale for this, for extensive Chinese loans at the beginning of the relationship was to help Chinese companies to establish something of a footprint in the region, right, to help them to establish networks, a reputation, to develop, expertise on the ground. This finance was given to governments, but was tied to the use of Chinese, often, not always, to the use of Chinese companies and equipment. And it's indeed done that, right, over time. But now these Chinese companies have their own networks. In many cases, they have their own reputations. They are extensively involved in certain sectors across the region. And they're engaging in forms of investment that, are a bit different than what we've seen in the past. For example, public-private partnerships. And some representatives from CDB themselves just this past year have noted that CDB is perhaps not the best positioned partner, right, to support these companies as they engage in investment through a wider range of mechanisms. And in fact, perhaps the commercial banks are better partners in that respect. And so it remains to be seen what we'll see, what will happen in 2021, 2022, but it may very well be that this particular model of lending is no longer, in such high demand, even among the Chinese companies, right, that are operating extensively in the region. Just three concluding points. The first is that, given the drop in Chinese state finance to the region, China's record of sovereign lending no longer surpasses that of other major development banks. We estimate that China has issued in total, right, 136 billion in credit to the region since 2005. But as of 2019, sovereign lending to Latin America and the Caribbean from the World Bank and the Inter-American Development Bank exceeded China's record over the same period. There were years in the past where CDB and Exim Bank lending combined did exceed sovereign lending from the World Bank and the IDB. The second point is that, we didn't see anything this year, but we might see some finance in 2021 that, it's unclear whether that will happen or not. Talks began in 2020 for a $0.4 billion loan to Ecuador. It would be a ICBC China Development Bank loan, but the deal had yet to conclude by year end. Also, Chinese Foreign Minister Wang Yi, in a sort of cloud diplomacy, as it's called, right, a teleconference with his counterparts in the region, other foreign ministers in the region, announced that China would offer $1 billion in loans to Latin American and Caribbean governments to assist with the purchase of COVID-19 vaccines. That money has not been drawn upon yet, but that we may see some finance issued in support of that particular objective in the coming year. And then finally, the combined effect of Chinese policy bank activity, but also co-financing initiatives, for example, with the Inter-American Development Bank, commercial bank finance coming from ICBC, from Bank of China, China Construction Bank, and others. And then other forms of lending, right, will ensure a sizable Chinese financial presence in the region for years to come. The policy bank story is not the only Chinese finance story in the region. And perhaps we'll see, investment in an even wider variety of projects. But it is unlikely that we will ever see, sort of the amounts achieved, policy bank peak lending, for example, $35 billion, if you look at the finance database, right, in 2010. I'll say just on the sort of other sources of lending very quickly, and then I'll conclude. Chinese policy banks weren't active in 2020, as we've said, but Chinese commercial banks were. Though lending, of course, at much smaller amounts. ICBC in particular saw there were a couple of deals that they supported, and even more. We saw even more activity, interestingly, from China's 3 private equity funds, these regional funds, and also from other joint funds, right? And they did, in fact, even amid the pandemic, support a series of projects. China, I believe it was the CLAC fund, and if not the CLI fund, here we go. Let me give you a list of what they look like. These various regional funds that supported the China Three Gorges subsidiary acquisition of Luz del Sur, which is involved in energy generation and transmission in the south of Peru, and also backed Zijin, a Chinese mining company's acquisition of a gold mine in Colombia, making that company the first ever Chinese company to be operating in the mining space in Colombia. So some pretty significant projects, even amidst the pandemic. So for more on all of this, please do take a look at the database, also our report, which we've co-published with the Global Development Policy Center. And I look forward to the Q&A. Thank you.
Well, thank you so much for those engaging presentations. I'd like to step back for a moment and put this information in a little bit of the broader context, specifically in the Latin American, Caribbean, China relationship. And these are some findings from the Latin American, Caribbean, and China Economic Bulletin for this year, which I co-authored this year with Zara Albright and Kehan Wang. As Margaret Myers said, the policy bank story is an important part of the story, but it's not the entire story. In other parts of the relationship, we see new forms of engagement budding, as well as continued strength in some strategic sectors that have formed the backbone of this relationship over the last decade. In terms of new forms of engagement, beyond policy bank lending, 2 new LAC countries have joined as full members of the Asian Infrastructure Investment Bank, the multilateral development bank that China spearheaded and where China has the largest vote share. And those 2 countries are now, Uruguay and Brazil, able to borrow from that country, so opening up a whole new avenue. Ecuador, which was the first full member last year, took out the first loan from AIB for $50 million. So it's small, it's co-financed with the World Bank. This is the first step in a new direction of new financing avenues. There's also a new form of engagement, of course, in COVID aid. Aid has not been a strong part of the relationship, as Latin America and the Caribbean is primarily a middle income region, but in the crisis year of the pandemic, it became a new avenue of engagement with over $200 million in aid extended to the region. Continued strength also in some strategic sectors that have formed the basis of the relationship. And here I'm thinking about agricultural commodity trade, which itself is remarkable given the phase 1 trade deal signed between China and the United States, committing to pivoting to buying more agricultural goods from the US. Instead, China continued to buy agricultural goods from Latin America in ever increasing numbers. As Margaret Myers referenced in the purchase of Luz del Sur assets, infrastructure investment continued to be a strong sector in this relationship and shows signs of continued strength into the future. And finally, I'll talk about what we didn't see this year. We didn't see any signs of triggering of a debt trap over the last decade as these policy banks loans ballooned in some years. Discussion swelled of the possibility that assets might be seized when repayment became difficult, but we did not see that this year, and that's noteworthy. So this map shows the AIIB and Belt and Road Initiative membership that I mentioned earlier. You'll see it's a spectrum from light blue, countries that are neither AIIB members nor Belt and Road members, to dark purple, countries that are both, and then to light pink, which are countries that are Belt and Road members but not AIIB members. So there are 2 dark purple countries now who have full membership in the AIIB, meaning they've paid in their capital and they're eligible to borrow, as well as Belt and Road Initiative members, and those are Ecuador and now Uruguay as well. We see also in a darker blue purple, Brazil, which is a full member now of the AIIB, although not a Belt and Road signatory. Those bluer countries are not Belt and Road signatories, the pinker countries are. We see these pinkish purple countries, Venezuela, Peru, Bolivia, and Chile, which are provisional or prospective members of the AIIB, meaning they've indicated interest, but they haven't paid in their capital yet. So they're not yet able to borrow. So that's still on the horizon for future years. We may see them join as full members in the coming year to open up a new avenue of finance. And the new avenue of engagement that is COVID aid. So over $214 million in aid extended. Now, these are calculations that we've made from the wonderful COVID aid tracker at the Wilson Center, applying a price basket that was calculated by Telias and Ordines at the Universidad Católica in Chile. Done a wonderful job of that. So applying these together, we can come up with an approximate cost of the basket to each country, and we can calculate that one of 3 ways, right? The absolute value, dividing it by capita, or dividing it by registered COVID case. Any way we slice it, we see 2 main things come out. One, it's widespread across a variety of countries. Countries that have not traditionally had very strong, for example, financing relationships with China, like Colombia, have received roughly the same amount of aid as a country like Ecuador or Bolivia, which has had much stronger financing relationships. So a widespread distribution of this aid. However, there are still favorites. And by that, I mean Venezuela, which accounted for approximately half of the entire disbursement of aid. It really stands out regardless of how you slice it. So we see China both branching out to new countries and continuing to reinforce these existing strong relationships. And then about continued strength, I mentioned earlier that commodity exports, specifically agricultural commodity exports, continued to be strong this year. All eyes were on these agricultural exports after Presidents Xi and Trump signed the Phase 1 agreement in early 2019, wherein China committed not only to buying more agricultural goods from the United States again, but surpassing the levels of agricultural purchases that they had before those trade tensions had initially emerged. As you can see from these graphs, we see LAC, the LAC region, and ROW for the rest of the world. These are China's imports of commodities from these 2 sources. And as you can see, beef and soybean grew about in tandem, China's purchases from Latin America and the Caribbean and the rest of the world, until those trade tensions emerged, in which case their purchases from Latin America and the Caribbean skyrocketed, while their purchases from elsewhere dipped. We do see some increase from the rest of the world in 2020, but Latin America and the Caribbean continued to grow as a source. So we do not see evidence that these trade relationships built on agriculture will be declining anytime soon. That's an important finding. And finally, electricity infrastructure. So during a crisis year, when economic growth is slumping, not only, and it's important to say, not only did Latin America and the Caribbean suffer a crisis year for GDP growth, the worst in the world at a estimated negative 7.4% growth, but had been dealing with sluggish growth for the last several years before the pandemic. So in this context, Western investors are likely to sell out of their assets in the region, and Chinese companies were well positioned to buy in. And so we see a rebound, actually, of Chinese purchases of corporate assets in Latin America and the Caribbean, specifically in the infrastructure sector. It's always been a leading sector for that relationship, but now it has taken over an overwhelmingly dominant role, particularly because of 2 Chinese companies, China Three Gorges and State Grid, buying up assets from Western investors who are selling out of the region. They're happy to move into that space when other investors are fleeing low growth or high volatility time. Now, the major 2020 deals, 6.7 billion of these two Chinese companies buying up assets, they were actually agreed before the pandemic year. The initial agreements happened in 2019. So this is not just fleeing the crisis year. This is, again, like I said, in the context of sluggish growth in the years before, Chinese companies happy to step in that situation. But in addition, even during the pandemic, when new projects were largely on hold, State Grid also agreed just in November of last year to buy an additional 5 billion, which is not reflected in this graph because it hasn't been finalized yet. It will probably be finalized later this year, of more electricity distribution assets. So all of these assets that you see here listed are electricity distribution assets in Peru and Chile specifically. And then finally, I'll finish by mentioning what we didn't see. The dog that did not bark this year is the triggering of a debt trap. Over the last decade, there has been concern raised that if the policy banks weren't lending with an assurance that that countries would be willing to repay, what are they getting out of it? Are they going to seize assets when that difficulty to repay happens? Well, as you see here, there's just mainly one country that has extremely high exposure to Chinese lending. And here we measure it two ways. On the x-axis is total PPG debt, that is public and publicly guaranteed. So not just government debt, but also state-owned enterprises. And on the y-axis is total commitments from CDB and Exim Bank since the last business peak in 2008 as a share of GDP. So Venezuela is far and away an unusual state. The next runner-up is Ecuador, borrowing nearly 20% of GDP since the last economic peak. But we did not see in either of these countries China begin to seize oil wells or seize gold mines. Instead, we see a patient approach. Ecuador negotiated $900 million of restructuring of existing debts. There are rumors that Venezuela may also have won a grace period, although it hasn't been confirmed. And so it may be time to turn the page on the debt trap narrative and say that they had their chance to trigger a trap and it didn't happen. And so that's likely not a realistic narrative for this relationship. Well, thank you so much, everyone, for being with us today. I look forward to the Q&A. Here are some links where you can find the reports that we've mentioned, as well as our Twitter handles. But I don't need to leave this up for the discussion because I believe Maureen Height, our communications specialist, will put all of these links in the chat, so you'll be able to click straight through.
Thanks a lot, Becky. Thanks a lot, Xin-Wei, and especially Margaret Myers from the Inter-American Dialogue for these great interventions. And again, like Becky just said, the links to all these studies and respective web pages have been popped in the chat. We have about 15 minutes. Why don't I read 3 or 4 questions or so and kick them to the panel. It would be best if people went into the Q&A button and introduced yourself and noted a question. However, I do see a couple in the chat. Please refrain from that, but I'll ask one from Benjamin Gadon from the Wilson Center. And Benjamin says, do you expect growing environmental awareness in Latin America, as evidenced by Yaku Perez's strong performance in Ecuador's presidential election and in the ratification of the Ex-Azu agreement, requiring greater transparency about the environmental impacts of development projects and to condition Chinese investment in Latin America, which remains concentrated in sectors with significant environmental impacts? That's one question. I'll ask another from, here we go, James Hauser Mitsui. James asks, given that the current president of the Inter-American Development Bank is an American appointed by the former President Trump, the hawkish Mauricio Claver-Caron, will co-financing initiatives between Chinese state institutions and the Inter-American Development Bank remain stable or decrease? One from Taylor Roth from the US-China Economic and Security Review Commission asks, what are the most important emerging sectors in Chinese investment to watch in the region? ICT, services, healthcare, pharmaceuticals, ? And to what extent do you believe these new investments will support Latin American and Caribbean countries in reducing their dependency on commodity exports as an engine for economic growth? Danielle Rudstein from the General Accounting Office asks, building on the idea of the possibility that the Chinese model of tied loans has run their course in Latin America and the Caribbean, what are the experiences of other regions, and have other regions moved away from this type of Chinese financing? If you folks answer those briefly, we can do another round. If not, this is it. Why don't we go in the order that you folks gave speaking? Xinwei, go first.
I think most of the questions are Latin America related. So maybe Margaret would
Okay,
start
we'll start
first.
with Margaret, and I'll look for and try to pick ones that are broader and specific to the energy for the next round, if these two folks are short and sharp.
Sure. Let me just address a few of those. I mean, on Ecuador, I think so much will depend really on just sort of the state of things in Ecuador, right? As the country emerges from the COVID-19 crisis, I would imagine more of a concern, depending upon the outcomes here about environmental considerations. But it's interesting that this most recent loan, the 2.4 billion loan that was being negotiated just over the past year and has yet to come to fruition, and it's unclear whether it will. Much depends also on whether this DFC offer is accepted. But I mean, the concern there, and of course this is under a previous administration, but or the current one, it was about the nature of the oil-backed agreement, right? And the concerns were coming directly from Petroecuador in that particular case. So not about the environmental considerations, but about the actual structure of the loan and the ability to pay things back in oil, and to do so over the longer term. But yeah, I mean, I would imagine there would be greater sensitivity, but again, this will all be weighed, alongside other, considerations, including just, the financial, broader economic situation in Ecuador as the region emerges from COVID-19. On IDB collaboration, I mean, already when you see some of this collaboration in between the China's, various banks actually, and the Inter-American Development Bank, it's not extensive, right? There are a handful of deals in which China has engaged as a co-financer alongside a range of other banks. It is not an extensive list. So I would imagine that, yes, this will continue to a degree because it isn't, a huge part of what the overall bank is doing. And one thing that was quite interesting, I haven't been able to verify this in other sources or from the IDB, is that the CLI fund, the China Latin America Industrial Cooperation Fund, noted just this past year that they set up with the Inter-American Development Bank a joint investment fund to expand investment and financing opportunities in Latin America. And this would have taken place just over the past few months. So to me, that seems an indication that yes, there is still an openness to collaboration and cooperation, but probably on a continued limited scale. Emerging sectors, I think Becky is probably best equipped to address all of that. But I'll say that, obviously nothing happened in the way of Chinese policy bank finance this year in Latin America, but on, with respect to the private equity funds, the regional funds, and the commercial banks, the focus has been about half of the deals, if we're tracking all of the commercial bank finance in 2020, were focused on renewable energy. And that is a trend that, that Becky noted as well. That ranges from, a lot of wind projects, a lot of solar projects, but also thermal electricity projects. And so this is, something I think we're going to continue seeing. This is a sector that was prioritized in China's own economic recovery. And so I believe these companies, and broadly speaking, are well positioned to bring to bear, their expertise overseas. They have been for a number of years now and will continue doing so. Tech too, although the financing it's a bit of a different arrangement for the tech investments. And so, yeah, I mean, those are the ones that strike me in the Latin American context. Beyond that, there are some mining, as I mentioned, mining related investments that are being supported by the commercial banks and also by the private equity funds.
Thanks. I'll pop in and contribute to the discussion regarding environmental awareness in general. The questioner asks specifically about the surprisingly good results for Yaku Perez, an environmentalist candidate in the Ecuadorian election. But beyond the presidential election, regardless of who wins, this actually is an area in which Ecuadorian scholars have been working as how to pivot away from oil-backed loans and more towards sustainability as a core part of the financing relationship with China specifically. And I'd like to point your attention to, if you go to the GDP Center YouTube page, and I don't know if Maureen can pop the link to that in the chat, but a few weeks ago, we had a webinar on debt for nature swap possibilities, debt for climate swap possibilities, and green performance-linked bond possibilities with our colleague here, Blake Simmons, who's on the call today, and with a scholar from Ecuador, Carlos Larrea, who has a proposal out specifically for that. So I think we will continue to see an interest in pivoting away from a future based on oil. Ecuador is aware that they're only looking at about a decade worth of oil extraction left for them. And so pivoting towards longer term solutions is definitely on the agenda. And as Margaret says, renewable energy continues to be a source of not only comparative advantage for Chinese contractors and Chinese financiers, but also an area that is picking up steam in the region. So I think we will see that, although that loan with Ecuador is oil-backed. That's currently under negotiation. So this contradiction, I think, will continue. And speaking of contradictions, the question about the Inter-American Development Bank is a very interesting one. The new president of the Inter-American Development Bank is a bit of a skeptic regarding China's relationship with the region, but is also very interested in expanding the IDB's lending capability, particularly through IDB Invest, the arm that finances private sector investments. Now, Margaret's talked about China co-financing funds, the one that was set up specifically for infrastructure between China and the Inter-American Development Bank went through IDB Invest. So if the head of the IDB is particularly interested in expanding IDB Invest, or if he is particularly interested in limiting the relationship with China, well, those stand in a bit of a contradiction. So it'll be very interesting to see how that develops. But again, the opportunities abound. The opportunities for infrastructure investment, particularly in renewable energies, are very strong if they're interested in pursuing them.
Thanks, folks. Well, rather than wrapping your knuckles for talking a little too much now that we don't have time, I'll say it's because of the great questions that we got from all these folks out there. And I have to say, there's over 26 questions in the Q&A button, and who knows how many in the chat. I'm sorry that we're not going to get a chance to get to everyone's questions. As we've noted, you can go to the Inter-American Dialogue webpage, take a look at the policy brief and the interactive connected to all the China Latin America loan data. You can go to the Global Development Policy Center webpage to look at the interactive associated policy briefs for the energy work, and also the China Latin America Economic Bulletin that Rebecca Ray talked about today, as well as on both web pages over a decade now of research and data to try to create more transparency about these issues and to elevate the discussion to be one that's more empirical based on these important and increasingly tense issues. Before I let everyone go, I invite you to come back tomorrow, same time. Putting in the chat, we're releasing a book that the GDP Center has published with the United Nations Conference on Trade and Development on Southern-led development banks, like the China Development Bank, like the Islamic Development Bank, like the CAF, or the Development Bank of Latin America in the region. It's the first book that focuses solely on these. It'll be chaired by Diana Barraclough from the United Nations Conference on Trade and Development, but it'll have presentations on the Brazilian National Development Bank, and I'll be giving one on the China Development Bank specifically, and it's the chapter that I have in the book. It's specifically on its interactions in Latin America. So we invite you all to that. We invite you to sign up to other events at the GDP Center, sign up for other events in the newsletters at the Inter-American Dialogue. And thanks so much for spending your hour with us today. And we hope that this is the beginning of a conversation about this, not the end. Thanks so much.